Hey folks, welcome to the Market Internal Review for Friday, September 1st, 2023. I'm actually recording this September 4th, Monday, Labor Day. Hope you all have had a wonderful extended weekend if that's something you're afforded. If not, I hope you had a wonderful weekend all the same and an easy Monday. We're going to hop right into Friday's price action here, looking at SPY on the 2-minute as per usual. See that we started out September with a near $3 gap up from August's last little bit of price action, holding well above the August lows. Starting off, of course, after such a large gap in either direction, we'll expect to see tick have a extreme reading, most likely in the favor of the direction of the gap. So in this case, a gap up. We're seeing extreme tick on the bullish side. Add and vold price and volume for the New York Stock Exchange, also reading bullish to start the day, as well as their 20 SMA trends, although most likely they're playing catch up. Interesting to see that we've got the trend showing a imbalance after such a large gap up across the entire market. I would be shocked to see an actual trending move, just given what I know about the markets and watching this data for so long now. It's not something I would expect to see any kind of real trend out of it. And in this case, I think trend mostly was not as accurate as other days. Although, with such a large range being built here on this daily gap, this trend showing a imbalance definitely gives me the confidence to take more of a longer trade in the favor of where I think the direction might be. And in this case, we pretty much have our early our early signal right out of the open when we're not able to hold this and we're way overextended. We're not able to hold this gap. We're at previous day's third deviation high, and immediately when I saw this day, I believe the ad was already, I'll just go look. I want to say it was cooked. Yes, we were over 1800. So 1800, I've often said, expect that to be anything above or plus or minus 1500 on ad can signal a trending day. And that is true. However, we started out there. I want to see it kind of work its way in within the first 30 minutes of the day, not start out there. Typically, if it starts out there, it could be an indication of a trending day. In this case, though, with such a large gap to test, a new month, this also was Friday, which ended the week and started us off on a long holiday weekend, with Monday, today, the day of recording, not being a market day. If you've been around the markets, you'll know extended weekends, usually the day that kicks those off is absolutely awful for trading. So around any major holiday or banking holiday, just usually doesn't present a lot of opportunities. So we're showing an ad of 1,800 stocks in advancement on the market. We're hot out of the gate with this large tick closure bullish side. We are right above the gap. What happens? We have this engulf, massive candle just smacking us right down below previous day's high range from August 31st. What do we do with that? Well, we continue to traverse all the way to the mid of yesterday's or 31st, August 31st range, and it happens to also coincide with the TWAP price from the same day. And we're now within first standard deviation range of August 31st. What happens? Well, anybody that chased this got absolutely wrecked as we rip it right back over previous day high. Now note that it is also below the first standard deviation on the day. It's below this TWAP target price, third deviation high from August 31st. And you can see that we're also not making a higher high. And for the most part, we're also not making a higher high on SPY. So it's best when you see this kind of agreement. What this means is that the New York market and SPY are largely in alignment. So we see add and volume both green. It's best to just wait, see what happens. There could be a rejection here, or they could accept it. Add's probably still pretty high at this point in time. Let's see, that's 10 o'clock. Where are we at on our add? By 10 o'clock, all right, so 10 o'clock, they actually break it down and send it back above 1500. We're right at 1524. So it is best to go ahead and just see what happens. Right around 1500 on add is a potential rejection spot or an acceptance spot. It's a pivot level. So what happens? We oscillate around previous day high and we have another engulf that takes out most of this price action here, fails to make a higher high from the open. We start to see average tick closures trending down. The add band is starting to dim. It was dim a little bit earlier. Now it's dimming again. Here's where we get it. This would have been a potential entry, but it's still above TWAP. So if you're going to wait for this engulf right here. We're breaking the TWAP. We're starting to really get a trend confirmation on advancement decline for New York prices. And what happens? Well, we start to traverse all the way down, not only to daily gap mid, which we already tested before, previous TWAP, which we tested before. Now we're saying, you know what? We don't like this price. The market heads down even lower. We get our first really strong bear tick, almost negative 900, and volume is even starting to show us a bear trend, although it's still pretty strong. We consolidate around this TWAP price. We're out of first standard deviation low into second, and we start to break down even more, and we finally land on third deviation low for August 31st, and that's essentially where we stop. We've got all these bear tick closures, and we're done. There's not anything else essentially for the rest of the day. But this trade here was a fantastic trade. Grab this engulf at TWAP, set your stops, previous high a day, and just let her ride. And it's not often, but you can go ahead and set your tool to all these different TWAP prices and just trim and move your stops as you hit through all of these other ones. Okay, and then use the data from MIT, or you can use the Mercy indicator and use that to guide where you should potentially manage your risk. Okay, this engulf here, is this a reversal? Well, we didn't capture the first standard deviation low, so it's safe to hold until we do so potentially. We don't break back in. We make an engulf back below, closing below this TWAP level, and then we start to head lower. Tick closure still heading down. Trend imbalance comes back, and we start to trend lower. These tick closures, much like these ones, can signal the end of a move until some much needed relief before more selling or whatever direction. Mercy didn't even have the RSI hitting below 30 here, and that was still enough for us to reverse off. So mostly green back up here. You can see the volume started to trend back towards advancement. And at that point, we never really broke back into first standard deviation range from August 31st until right at the end of the day. The rest of this was essentially just chop and not as clear from all the data in MIT. Maybe you could have scalped something with TWAP, but even with TWAP, I'm going to turn this range off. Even with TWAP, I like to see a first standard deviation break and reclaim, and then I'm trading not only to this one, but to TWAP and some of the other price targets. We're not seeing that. What does give me some confidence to maybe try that is the TWAP bands are flat. Typically I don't know that I've covered this before, but when you see a first standard deviation reclaim or any of these other ones, and you're going for a reversal setup, you don't want to see these bands continuing to expand and continuing to go against you and grow against you in a direction counter to what you're anticipating based off of the readings. So if these continue, like this band here, if it continues to expand downwards, that's because the price is going down. So if you get into this trade, say here, and you start to see the band declining, that just means the price is most likely moving against you. It's time to get out. Notice here, though, how this price movement doesn't have much of an impact on the band. And if you're real observant, you'll know, and you've been paying attention, you'll know it's because the tick is not strong. See, there's a lot of price movement that happens, and there's no tick to back it up. So you'll notice this movement here is just all, it's kind of a ruse. It's all BS. It's not really anything from substantial price movement on the market. Okay, it's probably somebody scalping and trading with, albeit with large size. Maybe it's the market makers trying to entice liquidity. I don't know, but either way, you'll notice the TWAP bands don't move a lot, and that's because there's no real substance behind these moves. Now we do get one here, and look, that's because the tick actually made somewhat more of an extreme low, same low that we made here. And if you've watched enough of these videos, you'll know it's very slight, but it is there. We made a slight higher low, and let's see, this is tick 960 something, and this is tick, yeah, I guess this is essentially a tick divergence. It's really tough to draw these when it's so close. There's a slight bit of a bend, but I would say this is enough of a divergence. Usually I like them much closer together. But yeah, then we try to retrace. Look where we end. Basically, session TWAP price around 451. We also had a mercy squeeze, which potentially could mean we're heading back down. But at that point, we've got such low divergence, probably a muddy signal. Qs, I think it had a similar day. We had another gap. You can see they gave it up very fast, and they traded below the gap most of the time. Counter to SPY actually traded, if I'm not mistaken, within their gap. Yeah, mostly within their gap. Russ, I want to say Russ and Dow was stronger Friday. So Russ, massive candle up, brought it all back down, went back up, and oscillated within the first standard deviation the whole time. The Dow, much like SPY. We'll go review trend. Trend was showing a overbought or potentially strong buy signal. Not much there. Like I said already, I feel like it was essentially slightly inaccurate. Volume. So the volume we saw per MIT on the SPY chart, mostly bullish all day. We had a brief moment right about here of a potential flip right around that pivot range or pivot level. Notice where we ended the day actually over the extreme area. I'm going to say we probably printed even okay, we printed even higher and extended for the last little 4 minutes there. Very suspect of potential gap up. Tick, we can see ratio accumulation downside most of the day with a couple brief moments of reversals. There's all the different extreme closures. The ad we already saw, mostly accumulating towards the downside with that morning move. Here's roughly around where that TWAP breakdown and golf occurred, and then boom, all the way to about 12:30, one of our favorite times. So a little bit of back and forth for the rest of this day. You can even see it as we finish out the rest of the day. VIX, I believe, closed lower. Yes, we are back to 13. back to 13. So with VIX back at 13, expect your trades to take longer. If you're not on futures and you're not you're not on futures scalping 6-12 points, your options trading, you're trying to grab 50 cents, dollar, $2 moves on an ETF, or you're trading stocks that maybe aren't known for their volatility or momentum, expect your trades to take a little bit longer. Expect some of your trades to maybe show some red. If you're a premium watcher instead of a chart watcher, just watch out for that. Of course, also, anything can happen. We can see VIX rip all of a sudden too. So there's always room for that once we hit such an extreme low on VIX. Tick levels basically showing us thinner bull tick areas. We did not come back to those, so I would expect them to be thin. And then the red ones, the bear ticks, really stick out a lot more, being more prominent down here at the lows where we spent more time. Look at all those rejections. I mean, if you turn TWAP off, I know a couple of people that really love the tick levels because these dynamic levels are just amazing. They often align with things like previous day high, previous TWAP levels, you name it. You can probably toss these on and use these if you're a scalp trader just trying to grab a couple candles. It's definitely an effective tool. It found this support from over here. I mean, if you had nothing else on your chart, you could probably figure out that this was a support or a potential support. And one of my last videos I just released, speaking of how to detect trending markets, you look at how to measure your markets and do it consistently, and having a reason for why those measurements should or shouldn't be reviewed and held in higher regard for their probabilistic measurements. And this would be one of those areas where, because we know this level is important due to the New York Stock Exchange's impact on SPY, we can have more confidence to know that we're going to expect a bounce here, right? But not maybe not here or or something here. Going and looking at the rest of the market as a whole. So we just started the new month of September. So these TWAP bands are all going to be essentially, I'm not going to say useless, but these ones need to build out. We're going to need a lot more data. I would say at least a week before we can really start building any kind of assessment for what's going to happen. The first, second, third deviations don't have as much impact because there's just simply not enough data on the month. But what we do have is all of the previous monthly TWAP levels now from August. And this is where we can start to look at these and see if the market is going to honor those levels, or if there's going to be some kind of impact, efficacy to using those measurements. And we can see a clear bounce right here off of August TWAP level. We have a couple bounces here. So this is kind of interesting to me, but the New York Composite Index doesn't always cleanly move against these monthly TWAP levels, which you would think it would, because the ad and the volt, it's all New York Stock Exchange measurements. But I have been doing more research on the market internals. Somebody sent me a link to just a ton of market internals. Really appreciate that. And looking at those, you can tell the data providers for the market internals. I'm assuming that they're for any charting software or broker like Thinkorswim that are providing internals. There's a data provider behind all of that, and they're not cherry picking, but they may or may not have all of the visibility to the entire internals. Just given like Amex, there used to be a handful of data that was specific to Amex, and that's gotten swallowed into New York Stock Exchange composite data feeds. And some of the older internals like ad and volt, there's different internals that may or may not include some more of that regional information. So anyways, I kind of just went nerdy on the internals, but I still like looking at SPY against the internals. I feel for whatever reason they have the best alignment. But looking at the August TWAP levels, look at how clean these movements are, all these rejections, this bounce down here that the tick level had us, about here, I think. And we got a bounce pretty cleanly off of that monthly TWAP. And just reviewing some of these wicks. So this is really good alignment here. I'm excited to have these August levels. And if we start to really break out of that range, we've got a lot of upside targets all the way up to 460. And we also, because we're mainly on the August TWAP price when we close the month, we've got a lot of downside targets as well. And we've got the 444 and way below. So more downside than upside targets. And if we continue to trend up, then we may completely blow out of all those and run out of monthly TWAP levels, which would be a little bit uncool because I like using these for scalps, but I would probably just go ahead and switch to weekly TWAP levels. I haven't been using them because the monthly TWAP levels, the quarterlies, the 75ths, and the 50ths, they all have been providing just as effective scalp and trade swing targets as the weeklies. Just I shared this chart in another Discord regarding finding out when potentially this trend really broke down on SPY. And this is just kind of my analysis. Feel free to take a screenshot of this, but I really enjoy the 10 and 20 simple average on the daily for just basic trend analysis. The 20, especially, you see a lot of bounces off the 20. It does become muddy down here, but I would say when that occurs, then you're going to look for the 50, which is the top of this cloud right here. Your 100 and your 200 are down here. So look at all those clean bounces off the 50 weekly trend line. And just something, maybe if you're not somebody that looks at the higher time frame, you definitely want to take a look at it and just align yourself to that overall trend when you are even scalping on intraday, because you'll notice, and I've mentioned it before, how there'll be days where the downside moves are very clean, very little reversal periods, and it's just more downside. You could even see it in this traffic here on the chart, where the downsides are delivered a little cleaner. I mean, this whole day, maybe not a best example because of the holiday weekend, but the upsides, we do have some cleaner ones, but look at this one here. Lots of little reversal candles inside, so not as clean. This day is not as great of an example of it, but the main point is it's always good to toss a couple of measurements that help you just very quickly assess what the trend might be on the higher time frame, and then maybe try to stick with that. There's an old adage, the trend is your friend. It's true for sure, until you reach a point of exhaustion, such as, here was a point of exhaustion. We're way high above all the major moving averages, the 50, 100, 200, and we finally make a little bit of a retracement, but it becomes a lot more aggressive with the breaking of the 20, break the 10. We're breaking some major price structure, making newer lows, and we start to break quarterly trends. We break the 50, and we keep coming down until, oh boy, are we going to actually test the 100? No, we're saving the weekly trend and coming back up. But this is something that's very helpful. I feel like if you're not doing it, you probably should be doing it. But save for that. Here's the interesting thing. I don't know if I can't delete all this stuff right now, but so we've got some interesting candle structure here. I'm going to zoom this up. So this wick low on this candle that traded within this really massive bar that tested and broke the lows of a ton of structure back here. This is almost a whole week's worth, and broke the highs of all the same structure. Then we had 1, 2, 3 inside days to where we made this incredible high of 460 almost. Now that's not SPY's highest price, I don't believe. No. So we made 462 here, and I'm not going to try to grab the exact high, but 478. So we came real close, within about $3 on this candle here. All right, we gave it all back. that's bad. And this was a huge candle too for SPY compared to all these other ones. Just look at it. I mean, save for this one, but look what happened, right? We sold it all down. Same thing here. So this wick low tests the closing price of this candle. We send it all the way back, and then we start to really break down again. This gap down was insane. I remember this day, and I guess if it's a Wednesday, I probably made a video about it. We were not able to hold this area here. Now it's not exact science why I put this level here. I mainly marked it at the candle open. I can see it's actually a little too low. It needs to come up some. Okay. Anyways, so this candle really breaks this whole range over here, which I call this kind of candle here kind of like a statement candle. It's really making a statement. It's the elephant in the room, if you will. You can't miss this one. So definitely closing below this one. This is exhaustion right here. So exhaustion, this is a great time to maybe start looking for some mean reversion trades. So much like we'll trade TWAP mean reversion. If you're somebody that's into swing trading, maybe you could look at swing trading mean reversion towards maybe like the 50. And that actually would have worked great in this case. And then you can target some different candle structure down here based off a myriad of different ways. But the reason I'm bringing all this up is because now that we've bounced off this weekly trend, not once, not twice, not 3 times, but 4 times, breaking back over 10-day average prices and 20, we did it with what? Another one of those statement candles. You can't miss it. Kind of like this one, and definitely like this one. Where did it take us? Bottom of a quarterly trend line that I've identified, back over right here where we've got some candles that really just could not break this level. We finally did, and then what did we do? We kind of chopped around and sold it right back into that price. Then we bring it back up on Friday, and we have that really weird day where we gap up, almost $3. Where did they gap us? Right here at this candle where we crossed down below the 10-day, we landed on the 20, and we never came back over the 20 since August 2nd. So this is a very interesting spot for us to have closed on the first day of September. And to me personally, what I feel like we'll probably end up seeing, what I'm expecting anyways, is at least a retracement somewhere in this candle range here, and roughly around the 50 SMA. Now the 50 is starting to curl up. The 100 is still trending up. I guess it's not going to let me get rid of that. And the 100 is, or the 200 is still trending up. So I'm going to expect to see some kind of retracement there. And hopefully, if you're a bull anyways, we'll bounce off and do something else. I don't like to try to project anything too crazy for any more than like a day or two. But that's what I'm looking at. We've got such a large candle here. I would expect, if we're still going to maintain bullishness, that the 50%, I like to measure 50% of things, 50% of this candle, I would expect to hold. So around 446 on SPY. I'm not looking to see that go any lower if I want to maintain kind of that bullish bias. So this candle is also important because it closed a lot of these gaps that we had. I mean, we probably already filled them down here, but the fact that personally I see gaps like this continue to hold resonance even after they've quote unquote been filled. I know a lot of people would just write these off afterwards, but I still see them trade down to the actual cent way after they supposedly have been filled. I think the market has a much longer memory than maybe some people would give it. And so that this candle bringing this all the way back up over that area of gaps and potential downside fill, now we're back up again, 446. I think that's really important to keep that on your radar. I guess we're going to see what futures is doing tonight. If I get a chance to look, otherwise I'll just wait till pre-market tomorrow. And other than that, not much else to bring up other than just my standard RSI little chart here for the spiders. Taking a look at energy, we're sitting at still a decent amount of volume, almost 20. Okay, finance, still so much finance at 41 million volume. So incredible. There's still a lot of laggards in finance. GPM, GS, Wells Fargo, I think Bank of America. So Berkshire was one of the leaders in there, and I can't remember. I think BlackRock was another leader. But don't quote me on that. Go look at it yourself. There's also very limited news this week. Economic data release. There's only a couple things. I think one of those days is a Thursday, and that's really it. This is a short week since today typically would be a trading market day, and there's no market day. Expect this week to be funky for price action because there's algos that are trading the markets programmed, and there's all kinds of data measurements and statistical models that are based on a 5-day week. When it's a 4-day week, you can imagine that it's probably more cost effective to, instead of training a whole bunch of new models around 4-day weeks, which are very rare, to just literally turn the switch off and wait for the next 5-day week. Obviously, there's still going to be large liquidity trading the markets, but it's just not going to be the same. So be careful and just maybe be extra choosy, extra picky on what your trade setups are. That's going to wrap it up. Like I said, 446 on SPY. I would keep your eye out on that. Hopefully they don't do something crazy like wick us down and gap us down right at 446 to start the week or something crazy. Like I said already, hope you had a great weekend. And as always, happy trading and thanks for watching.